Shares of Tesla are up, as we showed you just a moment ago, after the company surpassed earnings estimates in its most recent quarterly results. Investors were also interested to hear that Tesla converted 75% of its Bitcoin holdings into US dollars. But Elon Musk has told his audience that the sell decision on Bitcoin, quote, should not be taken as a verdict on Bitcoin. To wrap up all of this for us is Seth Goldstein. He's equity strategist and chair of the Electric Vehicle Committee at Morningstar Research Services LLC. Seth, thanks a lot for joining us. We'll get to the Bitcoin stuff in a moment, but how were the results at Tesla? The market seems to like them.
The results were in line with our expectations. We expected, due to the Shanghai COVID lockdowns and the ramp up of the two new factories in Austin and Berlin, that we'd see lower profitability sequentially versus the first quarter. But that they still had a record quarter and even beat the second quarter of last year. So very good results given what happened during the quarter, and we expect they will continue to see improved results throughout the year in Q3 and Q4.
How is the company able to do so well with the situation in China, where several of its factories, or at least suppliers, have been idled because of COVID for lengthy periods of time?
I think Tesla, the first thing they did was they were able to gather their workers and essentially isolate them within the facility to resume production earlier than perhaps other companies that did not take that track. And then they had record production at the facility in June, which really helped them close out the quarter on a strong note, and is a good indication of how the factory could run in the second half of the year once it's fully back up and running.
Okay, Bitcoin, the company surprising the market, I believe, by telling the market it has now sold 3/4 of its massive pile of Bitcoin and converted it into good old US dollars.
Yes. I viewed that as a prudent move, given that they weren't running the Shanghai factory at points during the quarter, and that they were still losing money on the Austin and Berlin factories. They wanted to preserve cash, and so that management pointed to wanting to preserve cash and do whatever they could to make sure they could run the business through the tough times during the second quarter, and not to be an indication on their view of Bitcoin, which I think made prudent financial sense.
Why is the market not concerned about a potential liquidity problem at Tesla, that it had to sell 3/4 of its Bitcoin to adequately fund the company on a liquidity basis?
Well, remember, they still have an untapped credit line. They still have a massive net cash position. I think management just takes a very conservative approach to their cash flow and wants to make sure they don't come close to a situation like 2018, where they had a lot of debt and potentially would not have had the cash flow to meet it. So management has kind of swung the other way now and wants to make sure that under no circumstances would they be able to, would they have a cash problem, even without tapping their credit facility.
What about guidance? What's the forward-looking view?
Management still expects to grow 50% this year, which is in line with our view that deliveries should come in around 1.5 million vehicles. I'd expect them to see record production in Q3, followed up with another record production at Q4 as Shanghai gets back and running, and as Austin and Berlin continue to ramp up and make week-over-week progress. So I think their guidance looks achievable.